Hey guys, it's Steve checking in. So I just wanted to touch base today and hopefully help with your long-term view as far as what's going on in the stock market right now. So as we've seen, in the recent weeks, the coronavirus has obviously had some impact and definitely maybe a major impact across the markets. There's definitely some other underlying factors that I won't go into today, but essentially, collectively it's caused mass panic, and with fear and panic, often people sell off, taking substantial losses. But within those losses and within that panic sell off presents opportunities for people like you and me who may not have all the capital or all the cash flow necessary to make monster gains or to withstand this type of storm. But if you're patient and you educate yourself at this time, or hopefully if you've done some research and gotten some sort of foundation built within, understanding how the stock market works and, how to understand value and where you can find that value within the stock market, this can also be a very good opportunity for us as a whole and collectively to pick up really, really good companies at a substantial discount from where they were trading just a month ago. So while people were hitting their all-time highs and just breaking records on and on and on, eventually, those will, it was almost inevitable that there was going to be some sort of receding in those gains. It levels the playing field. When you see Disney go from like $150 to $94 at this time, now it gives you an opportunity to possibly reassess that situation. And for a young investor or someone seasoned looking to make possible gains moving forward, this might be a really good opportunity for you to pick up like a Disney or an Apple as it becomes more and more feasible or affordable as this recession or this correction, if you will, takes place. And that's just to name a few. There's other companies out there. Obviously, the oil industry has been hit horrendously. Oil is down. I believe it's around like $30 a barrel right now. You have companies like RDSB right now, or RDSA, whichever you prefer there. They've taken a beating. I believe back in 2008, 2009, they were as low as $41 a share. Now they're trading below 30. So I'm not saying go oil, but it may be if you've done your research and you're comfortable with those companies, you may be able to find good value within there as well. And they also pay a decent dividend. So you are being rewarded for that, I guess, risk, if you will, in some people's eyes, but it also might be a really good buy-in point, especially for new investors. So, that's just to name a few. I mean, there's other industries such as the airlines and the cruise lines right now that have been really hit hard, especially with the fear and panic surrounding the coronavirus situation. Obviously, every sector has seen, pretty substantial losses in the last week, the last couple days. So, I want everyone to just remember the famous words said by Warren Buffett, and I could be flip-flopping this, but I hope that it helps. And he was famously quoted for saying, be fearful when others are greedy, and greedy when others are fearful. And I've heard that, numerous times in the last couple of weeks, and I hope that hits home for some of you guys. And you could take that information and run with it. And I hope the best for you guys. Stay level-headed. There's definitely a light at the end of all tunnels. So let's make it through. And like and subscribe, and hopefully put some more content out this week. See you.